Hello and welcome to this month's Luxury Market Report. As you probably know, I am Sherri Green with Coldwell Banker Realty, and each month I bring you a luxury market report. And I typically record a little synopsis video before the report. I have been remiss in doing that in the last couple of months. Our market in DC really took off in May. So if we've ever talked about real estate before, you know that we typically have a very strong spring market and a little bit of a lull in the summer, and then a very strong fall market. And typically our spring market takes off when the weather gets nice, so March or April. This year it did not take off until about May. And so for May and June, I have just been a little bit busier, and therefore I did not get my luxury market report snippet video filmed for you, but I'm back. You know, we wait till the end of the month and then we get our report together, and I try to bring it to you between the middle of the month and the end of the month. So this is the June statistics, our July report. It covers the last 13 months. It covers North America, United States, and Canada.
To download and read the entire report cover to cover, check the link in the description below.
So this is our mid-year review, right? So we're going to look at a lot of the trends that have been happening the first 6 months of 2024. And the most significant trend this month is that we have largely returned to a seller's market after a pretty slow start. 95 of those are a seller's market. Now, let me say, this is the luxury market and segment we're looking at here. It's a very different picture for the non-luxury market. And notable of those buyer markets, 11 of those are either winter destinations or ones that are typically slow during the summer. So what's going to happen this fall? I'm very interested to find out. This year has been different than we sort of expected. Last year was a little different than we expected. It teaches us all not to make too many predictions. Typically what we see though in an election year is a slowdown. Everybody sort of hunkers down and watches the election. Now, that's probably no surprise to you in the Washington, D.C. area. But I've learned from my colleagues all across the country that this is something that they experience as well. Now, I'm really interested to see what happens this year. We've had a wild couple of weeks, as we all know, in the presidential election. And so seeing what happens with that and how people sort of stop and pause this year, I think is going to be sort of notable for us to pay attention to. It could mean a great opportunity though. So if you are a buyer and there's something on the market during the election, it could be a time to really get something that is attractive to you that got on the market right before the slowdown happened. So we should certainly talk about that if you are in the market to make a purchase. One of the things we're going to talk about in the report is that the wealthy individuals and families who have been accumulating significant assets, that is just continuing. And we've seen the recent returns from the stock market add to that. You've probably heard me talk a little bit about we are in what we will see is the greatest transfer of wealth over the next couple of years. And this is going to add to that as well. We also look, in the report, we also look into the changing consumer demands as it relates to the luxury market. So luxury is no longer defined by a size and a price. Buyers are really seeking premium properties that are tailored toward their needs, and getting all of those things that you want in a house really becomes the luxury, right? The amenities that they want, or the finishes that they want, or the location that they want. It becomes sort of a lifestyle luxury rather than an opulence luxury that we are sort of used to visually seeing in our mind when we talk about the word luxury. And going along with this, we have to think now from this perspective of the seller. And so if buyers are no longer defining luxury by size and price, a seller has to be very careful not to overprice their property because it will therefore then go unsold. There's a lot more in the report. I wanted to give you just a little bit of an overview. I hope that you will open it up and read it. It's not very long, but it's certainly chock full of a lot of good information. But before I leave you, let me give you a few little statistics on the DC market so we can kind of bring this back down to home. Inventory is up 28% for standalone homes, and it is also up 16% for attached homes. And with that, prices are also up as well. They are up 14% for the standalone homes and 16% for attached. Now, again, remember that I am talking about the luxury market here. When we get into different types of properties, condos, co-ops, standalone homes, it's a totally different story. Our market is seeing a very minute, micro focus on what is moving well. It is down to the product that we have and the neighborhood that it is in and the price point in which it sits. Some things are moving very quickly. You could take that same property and put it in another neighborhood at a slightly different price point, and it may not move at all. And so we always say that real estate is local, and at this point, it is down to the micro level in Washington, D.C. So I'm happy to talk further with you about that if that is of interest to you. So that is this month's luxury market report. I hope you do read it cover to cover. If you have anything that you want to talk about specifically, whether it's in the report or something else altogether related to real estate, you know where to find me. I'm always happy to have that conversation with you, and I'll see you next month if I don't see you before.
To read the entire report cover to cover, check the link in the description.